I love rental real estate, and I love it even more right now that interest rates are as low as they can possibly go. However, it's not for everyone. Let me tell you if it's for you or not coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Corhorn Financial Group. Welcome to the Wise Money channel. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so the Fed has lowered interest rates to the floor, maybe going negative, although they say they won't. And they basically promised they're going to keep interest rates low for the next couple of years. Where do you get income from? Where do you get yield from? I love rental real estate. It's not for everyone. I'm going to tell you if it's for you in just a second, but I love it as an option. Why? Why do I love it? I mean, let me count the ways. All right, so number one, you get typically a 10 to 12% interest rate every year. Now, it's not a freebie. I mean, there's risk to get that kind of return, but if you're just, I'm in the Midwest, so let me use Midwest type terms. Say if you bought a $100,000 house, you could probably rent that house for $1,000 a month, somewhere around there. So that's a 10 to 12% rate of return. Now, you do have to pay the property taxes, which is usually around 2%. And then you've got other expenses as well and blah, blah, blah. But so your return is somewhere in the 8 to 10% range net of expenses before taxes. It's a pretty good deal, especially when you consider interest rates out there in the free market, quote unquote, with the Fed tinkering is like 1%, and you can find nothing on at the bank. So that's a good way to get income. It's a good way to get interest on your money. The second big reason that I love rental real estate is you actually get some tax deductions. Now, I don't like it as much as contributing to your 401k, your Roth, your IRA. I mean, those tax shelters are pretty sweet, okay? But rental real estate does also offer some tax shelters. So number one, your rental income goes on your tax return, but you get to write off some expenses. And one of those expenses is depreciation. You get to depreciate the property, depreciate and deduct your expenses against the property. That's a great deal. So when you're depreciating the property, you basically take the full value of your investment, the full value of the property, and you get to deduct a little bit each and every year, and it goes to make your return on that property a little more tax efficient. The second thing, thanks to the Trump tax laws, is you also likely will qualify for a qualified business income deduction, QBID, which allows you to get a special deduction of 20% off of that rental income on the second page of your tax return. Now, not everyone will qualify, so work with your CFPA and your CPA to make sure that fits for you. But if you do, I like this even better than the depreciation, because when you sell a property, you've got to recapture that depreciation. So you get to deduct it, but then you might need to add the tax back later, add the income back later. But with the qualified business income deduction, you get that deduction, you don't have to pay it back. It's just a 20% write-off, just like that. So I love it. Now, rental real estate though, despite those two benefits, high income, yeah, you take some risk, but offers high income, and you get some tax benefits, it's not for everyone. How do you know if it's for you? Well, here are my 4 laws of rental real estate, and I feel that strongly about them. They are laws. If you're not a yes to all 4 of these, then you're not a yes to rental real estate. I mean it. I've just seen it be disastrous for people with great intentions. The first one is you've got to have some cash. Now you might say, well, that's obvious. No, let me tell you what is obvious. A lot of times people get into investing in rental real estate because they look and they say, wait a second, I can buy a house and someone else can pay the mortgage? Great, I'll do that. And I don't need any money to put down. You can pretty much put nothing down on a house and get a full mortgage these days. That is extremely risky because you're not gonna get the best interest rate if you don't put any money down. Second, what happens when you need repairs? Third, what happens when property taxes are due? And fourth, what happens in between tenants? There is risk to rental real estate. You need some cash. And if your answer to each of those is a credit card or an emergency fund, or I'm gonna dip into my retirement account, that just increases the risk. And so you gotta have some cash to do rental real estate. Second, you've got to have some know-how. You've got to have some skill on houses and some construction skill. Because number one, if every time the toilet breaks, you've got to call a plumber, that's going to eat into your returns, right? If every time there is a big major repair, you have to call a contractor and you're not even sure what they're saying to you, you might get ripped off, you could be wasting money. So oftentimes when I tell people you got to have some skill, you need to know how to swing a hammer, they either interpret that as, well, I've got to do all the work. No, that's not true. Or they say their rebuttal is, well, I'll just hire a property manager. Well, I love the idea of a property manager, but there goes a little more of your return. And great property managers, guess what? They're already full. They're already full. So it's going to take you a while to find a property manager that you really trust. And in the meantime, if you don't know a thing or two about maintaining the house and that sort of stuff, then rental real estate might not be for you, okay? That's the second one. Third one, and this is where I usually tap out, time. You gotta have time. Having rental real estate requires time. That's where I often tell people, if you're gonna get into rental real estate, make sure you buy a house that's in your orbit. I mean, buy one that's on your track. I mean, somewhere between where you live and work, so that you go buy it every day. Because if it's a half hour away or it's way out of, way out of your normal routine, you're not going to get there. And when you have to go there, it's going to take you a ton of time, which is going to make it hard for you to maintain. So it's going to take a lot of time. Know that up front. If you don't have the time, be honest with yourself and say, hey, maybe right now rental real estate's not for me. And the fourth one is the C's. The fourth one is the C's. You've got to be okay with complexity and okay with confrontation. So having a rental property adds complexity to your financial life. It just does. There's another, there's 2 or 3 or maybe 4 or 5 more toilets you got to worry about. You've got to worry about an LLC. You've got to worry about insuring a property. You've got to worry about all sorts of different things. You're going to have a Schedule C on your tax return, maybe a Schedule E instead. I don't know. I mean, you've got more complexity to your financial life, okay? And that's just, so you got to be okay with complexity. And then second, you've got to be okay with confrontation. Your tenants are going to tell you if they pay rent, they are not going to be able to buy Christmas presents for their kids. And you're going to need to either have thick skin. I mean, they're going to tell you, nope, that stain was on the carpet when I moved in. And you're going to have to say, no, it wasn't, right? You're going to have to be okay with confrontation, because tenants, they're going to go through hard stuff, or they might, you might get someone that's a bad apple. I don't know, but you've got to be willing to have those hard conversations when needed. So, do you have the cash? Do you have the skill? Do you have the time? And are you good with complexity and being confrontational? If so, rental real estate might be a great deal for you. I'd work with your CFP and your CPA to figure out if it makes sense. The last thing that I would tell you is, even though rates are as low as they can possibly go, and so rental real estate looks even more attractive right now, you got to watch out for one other thing. These houses that are more prime for rental properties, their prices are going up considerably. We've got such a dichotomy in real estate right now. It is booming. If you're below $250,000, houses are just flying off the market. And yet we've got a lot of tenants, a lot of people that can't pay their rent, can't pay their mortgage. So we've got this weird dichotomy going on in the real estate world. And right now, these properties that would be prime candidates for rentals are getting bid up in price, which means your return could be a little bit lower, means your risk is going up a little bit. So just be aware of that. Once again, work with your CFP, work with your CPA, see if this makes sense for you. All right, if you need a CFP and a CPA team, you can always contact a member of our team at Korhorn Financial Group. You'll find us online, korhorn.com, that's Korhorn with a K, or wisemoneyshow.com. You can find us there as well. Or you can send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.